this computer. Okay. And you're able to share screen. So whenever you're ready, we can share screen.
Okay, perfect. Okay, so I'll go ahead and just introduce myself. My name is Nikki. I am the marketing specialist here at CU Hawaii. And we're going to go ahead and go over some financial literacy today. I'm going to share my screen here. Okay. Can you see my screen?
Yeah, it's coming up now. Hold on one second.
Okay.
Yep, and we see it. It's there.
Perfect. Okay. So financial literacy, basically with CU Hawaii, we want to create more possibilities for your financial future. So with that, we're going to go over several items that we feel are key that can help you, and then also some tips for your future when you're looking for loans, mortgages, things like that for your family. So we'll start off at the basic of why financial literacy is so important. So financial literacy helps you know your options and be able to plan for your future. This can be done through budgeting, financial courses, and tips available through various sources. So like today, we're going to go over some of those things that'll help you. Okay, so how to determine your budget. A budget is really important. When you begin your budget, it is important to understand how you're spending your money. So when you spend your money, you have to think of it in two different ways. There's fixed expenses, which are expenses that basically stay the same. And for example, those are your rent, car payments, any student loans. You have your variable expenses. Those are expenses that do not stay the same. So those can change from any time. We have groceries, utilities, gas, credit cards. Those are all items that are variable. Because they can go up or down. And you also have the ability to change those. So those are more so in your control. Okay. So here we're just going to take a look with that budgeting in mind of a sample budget for a household of two. So you can see we have fixed expenses of rent, $1,100 with utilities included. We have our variable expenses. We have things like phone, cable, groceries, household items, if you eat takeout. And then we have some Netflix, so just a little bit of entertainment in there. This budget is to show you basics. This one is in mind where you do not have an auto loan at the moment. So you can see without an auto loan, if you're carpooling or you're shuttling in with others, this is what your expenses would look like. A total monthly bills is about $2,085 that you'll see here. And when you review the sample budget against your income and your household income of two, right here we have basically bare minimum. We have the minimum wage for Hawaii, and then we have a little bit above minimum wage for your second income. And you can see the amount that is remaining after you've split up the bills. So if you're splitting them 50-50, this is what you get. And the remaining total combined budget is $657 per month, and that's a really good thing. When you do this, you can see that that $657 per month is an additional that you can spend on things that you need. So if you do need to buy a vehicle, then you can see how much you have to be able to put towards and what you can afford. Okay. Now, how to improve your budget. So it's a general goal is to aim for 20% of your paycheck to put away in savings. For minimum wage, that would be about $252. But of course, the more the is better. And what you can do is to improve, you can review those variable expenses that I mentioned to change that. So you can see what can be removed or modified to be able to save more. For instance, if you don't watch your Netflix, you can get rid of your Netflix subscription. Or if you have a cable subscription, you can review that to see what you're paying for and how you can modify that. Okay. Now, why is it so important to save? So savings makes sure that you have the money for the essential to be able to protect you from things that could impact your finances in the future. So adding that savings into your budget is really important, especially if things come up. So having a baby, unexpected car repairs, because a lot of the times we don't know when our car is going to break, but it breaks and we don't know how much that's going to be. So it's good to set aside money for that in case it happens. Also bill increases. So if your variable expenses go up, maybe the cable bill goes up, or something changes on one of those, your credit card bill goes up because you're spending more. Those things can affect. Also, if you lose a job or you're unable to work, or if you have a change in relationship, you went from 2-income household to 1-income household. It's always good to have that extra savings in your budget to protect you. Okay. So savings for the future. So as I mentioned, adding that savings to your budget helps you also protect your future, but it also helps you for future purchases that you're looking forward to. So Christmas funds, vacations, down payments, starting a family, insurance or registration and taxes. What you can always do is you can set aside special savings accounts for these, specifically for those reasons, and you can put money towards it slowly. And we'll get a little bit more into that later as well. But one of the budgeting takeaways that I'm hoping to have you folks do is try it for yourself. Look back at the past 3 months and write down all of your expenses. Review whatever leftover income that you have. Determine what your future goals are. Are you looking to buy a house? Are you looking to, afford a car? Maybe an upgrade on a car if you already have one. And then you review your variable expenses for any possible changes. Also make a plan to set aside for your financial future. So determine how much you want to set aside and then how to do that. Okay. So how you can use and monitor your finances. So savings and checking accounts are a great way to be able to have access to your funds while being able to monitor and keep them safe. So generally, savings accounts are best for saving money. You have dividend options. You can put your money in there. You also have certificate options that you can get and build off of what you have put in there. With checking accounts, those are more so best for spending money and have quick access to your account because of the products and services that come with it. Okay. So some of the services to manage your finances. So checking out these additional services can help you manage, monitor, or increase your finances. So things like direct deposit. One of the reasons why direct deposit is so great of an option is because it is quick access. You don't have to take your check down to the bank and cash it out. Also with direct deposit, you can choose to allocate how you want to deposit those funds. So if you have a goal in mind of saving $200 per paycheck or $100 per paycheck, then you can specifically state that you want every paycheck $100 to go to your savings and the remainder to your checking. So that allows you to automatically save. And then you know what's in your checking is available for you to use for your monthly bills or whatever needs that you have. So direct deposit is a good option. Also, we have debit and ATM cards. Those are also quick access to your checking account, which allow you to charge. And also, if you're using your debit card, it does have more of a layer of protection than cash. If you lose cash, then it's gone. But if you lose your debit card and it's used, as long as you report it in a timely manner, then you're not liable for any fraud on your card. So those options help protect your finances, and they're great options to use. We also have rewards checkings. So rewards checkings basically is gonna reward you for using your account for basic any-day items that you have. We have a couple different options here at CU Hawaii that you guys can choose from that you can look into. It's called our Kasasa Rewards Program. And we do allow for cash back or gift cards, things like that, to like iTunes, things like that. So if you want more information on that, please feel free to reach out to me or any other representative, but it's a good way, basically, like I said, to get rewarded for your everyday purchases. Okay. Also overdraft protection. So overdraft protection, there's two different ways you can use overdraft protection. And it's basically that. It's protecting you from overdrawing on your account. So what that means is you can link your savings to your checking. And if you don't have enough funds in your checking when a purchase comes through, it's going to pull from the savings as that overdraft and protect you from overdrawing your account and possibly getting a fee. You also have an option to do a small overdraft loan, and that could be like a $500 loan. So instead of touching your savings, then you just pull from that overdraft loan, and it's normally a small interest rate. So you just repay it back when you need. But again, it's a good way to protect both your savings and your checking. We also have courtesy pay, and courtesy pay is something that is available. It's similar to overdraft protection. There is fees involved with that, so we can go over that here at CU Hawaii if you're interested in that. But the courtesy pay option is available for people that don't utilize the overdraft protection. And basically, it does allow them to overdraw their account if they need to without taking a loan or anything like that. Payroll deduction is great when you have auto or loans or any personal loans. Basically, what that's going to do is it's automatically going to take out of your payroll the amount to pay your loan. So you don't have to worry about making that payment every month. And then also it makes sure that you've made your payment and it protects your credit. Okay. So certificates is something I mentioned before with savings accounts. And those are basically where you would put your funds into the savings, a certificate savings, and you would build interest off of that. That's a good way to save. E-statements, that's going to allow you a very convenient electronic method to monitor your finances. And why it's so important is because you want to make sure that all of the charges on there are yours, and that you notify the bank if there, or credit union, if there's any problems with your account as soon as possible. So then that way we can correct it for you. Online banking, that's another great way to access it immediately rather than waiting for your statement. And bill pay allows you to set up your bills to pay every month. It could be your HELCO bill, it could be any cable bill, things like that, that you can schedule to send electronically out every month. And then again, that way you make sure your bills are paid and taken care of. Okay, and then special savings. So special savings is something that you can do. At CU Hawaii here, we do offer you to have multiple savings accounts. So you can have a regular savings, and then you can have another savings on top of that that you can title whatever you want. So for example, you can have a travel savings, or you can have a taxes or insurance savings. So that way you can allocate and put into those savings accounts exactly what you want to spend for the future. So if you want to save for towards a vacation, then you just slowly put in there every month, and you can see that savings that you don't touch specifically for that. So that's another great way. Special savings accounts can help you to monitor, but then also manage your finances. Okay. So here we're going to start going into some of the loans. So auto loan tips. So even if you have not bought your first car, or you are looking to buy one, or you have one, these are some great tips for you. What we do mention is to check out and understand your credit score, because you want to make sure what range you are at. That is going to depend on the interest rate that you get and what you may qualify for. Another great thing is to get pre-approved. At the credit union, if you've been a member, what we do is we have a set qualification period, and then you get pre-approved with us first. You get a reward back for that based on the purchase that you do. So us, and then a lot of other places do offer those kinds of incentives. So pre-approval will actually help you. And what you do is you get pre-approved at the bank or the credit union first, and it would allow you to know how much you can spend before you go to a dealership, or if you're buying a vehicle online. So you know already what you can afford. And then, like I said, there's those great rates that are attached to it, and those discounts and things like that that go with it. Also ask about rate discounts. So a lot of places do offer rate discounts. At the credit union, we do offer a discount if you have those automatic payments. So if you do the payroll deduction, we do offer a rate discount. Also, if you do a certain percentage of a down payment, we'll offer a discount as well. Other things with auto loans, you want to ask about GAP. So GAP is a protection on your loan. Basically, the loan amount versus if you were to get into an accident and your insurance provides you a check for it. If that check is not enough to cover the loan, a gap benefit will help clear that gap basically. And so you're not out any of that additional money that you had for the loan. So it protects you. Loan protection is also some great things that are available. You can always come in and ask if you have a loan already or you're looking to get a loan. Those things can always be added on. And loan protection offers various things. There's loss of life, and then there's also job loss, things like that. So if you lose your job, it helps you. If you have to have a hospitalization, things like that. But if you are interested in those, please feel free to give us a call because there's a lot of more information that we can provide you on that. And again, it's a great benefit. Okay, so understanding credit reports. So there are 3 credit reporting agencies. There's Experian, TransUnion, and Equifax. These agencies basically inform lenders about any credit you already have, the balances, the credit limits, and your payment history. What they do is they assign a 3-digit credit score that reflects your credit worthiness. Sometimes you may also have heard it referred to as a FICO score. Okay. Also, you are allowed 1 free credit report per year, and you can do that by visiting the annualcreditreport.com. Okay. And it's always a good idea to know where you stand. So how your score is broken down. So your credit score is designed to give lenders a fast, accurate prediction of the risk involved in giving you a loan. Your credit score is based off of 5 things. So in there, there's payment history, the total amounts that you owe, your length of credit, your new credit, and then the types of credit that you use. And one thing to note is the higher your credit score, the lower the risk for the lender. So that allows us to provide you with better rates, and then also to be able to make sure that we can, offer you the loan, because we want to make sure that the risk is low for both you and for us. We don't want to lend to somebody that cannot afford it, and then they're in a worse financial position than they were before. Okay. So credit scores, the payment history. So that is weighed as the most important factor in calculating your credit score. So things to note for that is negative marks, such as late payments, result in a deduction of your points for your score. Also, a history with little or no negative marks will result in a higher score. So this is one of, as I mentioned, the most important factors, and that's something that you really want to make sure to, pay your loans on time. Try to get as little to no negative marks as possible. If you are ever having any problems with paying your loan, it's a great idea to reach out to your financial institution to talk story with them about it. A lot of the times we can help you. We can make payment arrangements. We can talk to you and see what your finances are and how we can help you, because we don't want you to have the negative score on there. We don't want late payments for you or for us. So it's a great idea to just talk story with us. Don't be afraid to do that because we are always here to help. Okay. What you owe is the second most important factor in calculating your credit score. What you owe is compared against your credit limit. And this is why sometimes a credit card available balance is actually lowers your credit score if you close it. So if you have a credit card out there and you're closing it, you're essentially closing out a loan that can help you, because activity on your credit report helps you build credit. The main thing, though, is you want to make sure that that activity is positive and not in excess. You don't want to overspend. Okay. The next thing is length of credit. So how long you have had credit is the third most important factor. And that's basically age of your oldest credit account, the average age of all of your credit accounts combined. So that is something that they look for. If you're just starting out and you're fresh and you have no credit history, that is fine. You can use some of these tips to help build your credit and start. But it is it is the third most important factor. So like I said, making payments on your loan, that will be the main thing that you want to focus on. Okay, and then also the new credit and types of credit, those are the last factors of your credit score. One thing to note is requesting your credit score is not going to affect your score. So if you go out to the annual freecreditreport.com, it's not going to affect your score, drastically for you to do that. And then basically also maintaining and obtaining and maintaining proper revolving credit is one of the best ways to build up your credit score. So the credit cards that I mentioned, not closing them, is because it's a revolving credit, and it allows you to use your credit card, you borrow against it, and then you pay it back. That shows repayment history. It shows that you're able to borrow, repay, and then use again, and not in excess. So that is why revolving credit is one of the best ways to build up your credit score. So since we talked about credit cards, we can provide some credit card tips for you. And basically, not only does it help build your credit, but it also gives you access to additional funds that you may need. So some tips are review your rate options. There's fixed or variable credit cards out there. And when we say fixed, again, that means that it is a set rate. So that is amounts rates that don't change. Variable would be a rate that can change, and you would want to make sure that you review any terms and conditions with that, when it changes, how often it changes, and how much it can change. What is the max? Here at the credit union, we offer fixed credit cards. So you get one rate for the whole duration of your loan with us. Ask about free rewards and other benefits. So when you're looking in for a credit card, you want to know, what are the benefits of this card? And then also, is there rewards? With a credit union, we do have a free rewards program with our platinum credit cards. So basically, you earn 1 point for every dollar that you spend, and then you can redeem that later on for cash or gift cards, and it's cash back to your loan. Things like that. So those are benefits and things that you'd want to know about beforehand. Also, remember not to overextend. So when you review your budget, you'll kind of know what you can afford. When you're applying for a credit card, you want to make sure that you're not going to apply for something that is way out of your budget. If you apply for something that is out of your budget, of course, the financial institution will let you know. However, you just want to make sure that you're not overextending yourself and that you're being realistic about the amounts and what you feel comfortable affording. At the month end, what is recommended is to keep your balance on your card below 20%. This is one of the tips that we can provide that can help you build credit. So if you're using your credit card, that shows usage, and that's great. At the end of the month, when we report the balances over to the credit bureau, if that balance is below 20%, that usually is a great calculation for them to be able to boost up your credit score. That is what we found, is that if you keep it below 20%, it shows that you're using the card and you're repaying it, and that you're keeping it out of excess. So it's good. Also, you want to ask when and how interest is charged. So for credit cards, if you make a purchase on your card, you'll have a certain rate. If you make a cash advance where you're taking cash directly out of the card, whether it's through an ATM or at a teller window, those may have different rates than when you're just making a purchase at the store. And you want to know when. So for purchases, for instance, at CU Hawaii, we have a 30-day grace period. If you make a purchase today, it's not going to show up until next month's statement, and you have that 30-day grace period to make a payment on that and pay that off before you get charged interest. With cash advances, those are something that are normally charged interest from the day that you take it out. And those are normally paid off last when you make your payment. So knowing when and how interest is charged is good to be able to know what's best for you when you're looking for and shopping around for a credit card. Okay. So if you're looking to buy a home, So building your credit is essential to getting a mortgage. Your credit history and score are the most important factors when you're qualifying and getting the best rate available. If your credit score is below 700, you will likely pay more for your mortgage. So that's why we try to provide these great tips to help you boost up that credit to get you to where you want to be and get you the best rate that you can. So sometimes waiting and improving your credit score first will save you money on your monthly payments in the long run. And what we're talking about here is maybe $50, $100 a month. Just depends on your rate at the time, on your score, and the terms regarding your loan. But those are something that you can think about. Having that extra $100 a month, is a good thing, because then you can set it aside for home repairs or insurance, other things like that. So that is why improving your credit score and making sure that you're set from the beginning is really good for your future. Okay, so how to prepare your credit for mortgage. So these are some tips, again, to help you get the best possible score. So pay your bills on time, pay down your debt, don't close credit cards or other revolving debt, as we mentioned, and then apply for credit sparingly. Also, allow at least 3 months or more to repair your credit. So if you're starting out and you don't necessarily have great credit right now, follow these tips, but then also give it some time. Know that it is not going to be immediate, that you will at least need to wait 3 months, if not more, to start seeing some changes. So working towards a mortgage. So something to note is that lenders look for employment stability. So 2-year history in a similar line of work is something that is what they generally look for. We also look at employment gaps, if there's any gaps in your work and how long in between jobs. If you are self-employed, it is usually a little bit harder to verify, but it's not impossible. It just may require additional information. Okay, so employment is something that you will need to keep in mind when you're looking towards mortgage. Okay. If you're considering a home purchase, there's lots of mortgage options available. So what you would want to do, as mentioned, prepare and repair your credit. Not all loans require a huge down payment, so shop around to find out what you may be eligible for. Down payments are good to have, but we don't want to scare you off thinking that you have to have a huge amount of savings on the side in order to be able to afford your home. So that's why we say shop around, find out what you're eligible for so that you know your options. Also, get pre-approved to determine your available price range. So just like with auto loans, before you go and buy, it's always a good idea to know what you can afford. And then once you know what you can afford, you can start shopping, through the websites or looking through a realtor and find out. Also, what you want to do is you'll want to make a list beforehand of what your wants and versus needs are in a home, and when and where you can compromise. So some of the wants versus needs. So for example, you could maybe want a garage, that could be a want. A need for yourself would be, we need to be on a property that has running electric, that kind of thing. And your wants are something that you could compromise on. So maybe you found a home that you do like, but it doesn't have a garage, and so that helps lower your price range. So that's something that's good to think about before you're actually purchasing a home, and when you're looking for it is knowing what you want and where you can compromise. Okay. And then finally, what we're going to do is we're just going to mention some notes about down payments. So determining the down payment that you would need would depend on what they call an LTV, and that's known as a loan to value. So the value is based off of either Kelley Blue Book for autos or the property tax assessed value for a home. These are things that, like for the property tax, Hawaii State does, and they send out. And it's also available online that you can look for. The Kelly Blue Book, that's something that's online as well, that you can find out if you're buying from a dealer or if you're buying from a private party, what the general value of that vehicle is. And that's something that's good to know, because especially when you're going to a dealer, you know what the value is, and if they are, you know, adding a lot to that sales price, or if it's a fair value. Okay. What the lender does is we compare that value against of the home or the auto against our percentage. And then the difference between that and the final sales price would be your down payment. So for an example, we have a sales price here. This is based off of, I believe it was like a 2019 Nissan diesel vehicle. We got these are real prices. So the sales price right now is listed at $69,995. When you look up the Kelly Blue Book on it, the Kelly Blue Book is assessing the value of that vehicle at only $51,168. And then at the credit union here, you know, depending on your credit score, if you have a great credit score, you know, the LTV, we would loan up to 130% of that value. So of that Kelly Blue Book value. So if we calculate what the value of that vehicle is listed as and our percentage of the LTV, we will go ahead and lend out for you $66,518 if you're approved. The difference would be that $3,477. So that difference doesn't necessarily mean that that is your for sure down payment. What you would want to just take a look at is see, can you bargain maybe with the dealer and see if you can bring that price down? You know, maybe the sales price, you know, ask them for a little bit less. So then that way your difference is closed out. And then that way, you know, you maybe don't have a down payment at all, or your down payment is smaller. And the same thing goes for home ownership. This listed sales price, you know, you can also require or ask for an inspection and know what is the value, you know, based on the property tax excess value, and then also the value of the inspection to know, you know, where improvements might be needed and what things might need to be paid for down the line. That'll help you when you're working with your realtor to know if you want to ask for a little bit less on the sales price. And that'll help you, again, make up that difference. Okay. So CU Hawaii is here for you. We hope to have created more possibilities for you in your future, and we look forward to the possibility of you either joining or expanding your financial relationship with us if you already have an account. Again, my name is Nikki Raymond. I'm the marketing specialist here, and I am available for you for any questions or to direct you in the right area. Okay. Thank you so much for attending. If there's any questions or anything, I can go ahead and take those now. Oh, I don't know if I can hear you, Renee.
Okay, can you hear me now?
Now I can hear you.
Okay,
Yeah.
I don't know, I was on mute. Something happened. Anyway,
Yeah.
could you just go over your branch locations so that
Yeah.
employees know where they can go, and then also like your hours of operation so they know when you're open?
Yeah, so we have a lot of convenient branches. We have on the Kona side, we have the one that's on Kuakini Highway. That one, it has drive-through, and it's open from 9 to 5 generally. Our Na'alehu branch, we do have one there as well, 9 to 5. That one is located right next to Punalu'u Bakery, so right on the main highway. Then we also have our Pahoa branch that is located in the old area where Malama Market was, in that little Pahoa shopping center area. That one is 9 to 5. And then Ke'au branch we have as well, same hours, 9 to 5. That one's on the Ke'au bypass road. So when you're driving by, you normally can see it there. That one also has drive-through services available. We also have a convenient location right outside of KT Poinico. It's a small little area right on the side of the entrance. Okay, and that's on the Makai side. So when you go over there, you might see them on the wall. You're not sure what it is, but that's a small little branch of ours.
Mhm. Mhm.
We also have one, our main branch is Hilo. It's on Hinano Street. That one is open generally 9 to 5. Our RTS units are open earlier at 8 o'clock. And so that has drive through. It also has walk up where you can walk up and use canisters as well. All of our branches do have ATMs available for convenience as well. Okay, then we do also have online banking that is available 24/7, and then telephone access. So you can do our audio response and access your balance and history and things like that.
Thank you. That's perfect.
Yeah.
Could you explain a little bit about like a children's savings program? I know you guys had a Mula Mula program because some of our employees have young families and they might be interested
Mhm.
in including their children in this financial literacy. If you could explain some of that.
Yeah, so we do currently have Mula Mula accounts. So those ones we do have little sticker books as well to help encourage savings. So they can go ahead and get the stamps and then get prizes and stuff with us. But generally, that's how it's the same as a savings account that you would have as an adult. But we do offer free coin bank services. So we have a coin bank. So that's good for the kids to be able to save. They learn how to save and then they can see how much they've got, run it through the machine. It's always fun for them. And then put that into their account. And like I said, it's free. So there's no charge for the kids for their Keiki accounts.
Yeah, I like the coin bank. I use that. I use
Yeah.
that often when we collect loose change around the house. It's always good to use the coin bank.
Yeah.
One of the questions that normally comes up is, what's the difference between a bank and a credit union? If you could just briefly kind of share with the staff what that difference is, and what is it about a credit union that makes it special?
Yeah, so the difference between a bank and a credit union is banks are basically owned by shareholders. Credit unions are owned by the members. They're chartered, federally chartered, and it makes it so that we can offer products and services at lower rates for our members. And then also we don't charge higher fees and things like that. So banks, because they are essentially like working as a business, they are going to have a lot of that stuff that is for profit, where credit unions are nonprofit. And so then that way we can pass those savings or their better rates on to you. That means better dividends for like the savings, the certificate, things like that, or better loan rates as far as being able to offer you specials and things like that.
And anybody can be a member of CU Hawaii if they live here or.
Yeah, so membership basically is anybody living, working, or worshiping here on the island, or if you have, a family member that is a member of us, the credit union as well. Membership basically we generally ask for $50 savings. So that would be your savings to start, and then a $1 membership fee. And then from there, you can go ahead and open up a checking. You don't have any minimum required deposits for that. But that comes along with a free debit card. If you get just the savings, we also offer free ATM cards.
Okay, perfect. Wes,
Yeah.
did you have any questions? Oh,
Yeah, none for me. Thank you.
okay, thanks.
Thank you.
So we will send out your contact information, Nikki, along with the
Mhm.
email of this recording to our entire. So we have about 130 employees, so we'll be sending that out to all of them with your contact information. And should they have any further questions for you, they'll certainly contact you directly. If I get any questions from our team, I'll send them your way. But I really
Okay.
appreciate your time today. And we do
Yeah.
have some exciting takeaways that Nikki has provided that I'll also be including on the email. She's provided a budget spreadsheet as well as some additional information regarding mortgages. So really good stuff. And again, appreciate your time, Nikki. Have a wonderful day and we will be in touch soon. Take care.
Thank you. You too.
Bye-bye.
Bye bye.